You have been told your entire life to save your money. It is what responsible people do. But what if I told you that by doing the exact thing you were taught, you are actually getting poorer every single day? That savings account you feel so good about, it is being secretly eaten alive. It is a guaranteed loss. But what if there was one specific type of savings account that is actually fighting back against the silent thief of inflation, and in many cases is actually winning? Stick around, because I am about to show you how to stop your money from bleeding out, protect your cash, and actually start putting more real money in your pocket, starting right now. Let us just get right to it. Here is the problem, plain and simple. You work hard. You spend less than you make. You do the right thing and move that extra cash into a savings account at your big, familiar brick-and-mortar bank. You feel safe, but you are not safe. You are losing. This is because of a word you have heard 1,000 times, but most people do not truly feel in their gut: inflation. Think of it like a silent tax on your cash. It is why a cup of coffee that cost you a couple of bucks a few years ago now costs you $4. The coffee did not change. The value of your dollar went down. Now, let us apply that to your savings. As of the latest data from May 2026, the annual inflation rate in the US was 4.2%. That means, on average, stuff costs 4.2% more than it did a year ago. Your money now buys 4.2% less. So for your savings account to simply keep its head above water, not even to grow, just to not shrink in what it can buy, it would need to earn at least 4.2% in interest. I want you to do something. Pause this if you have to. Pull up your banking app and look at the interest rate, the APY, on your savings account from one of those giant household name banks. What do you see? If you're like most people, you're probably seeing a number so small it is a joke, something like 0.01%. Or maybe you're closer to the national average, which as of June 2026 is just a measly 0.61%. Are you starting to see the problem? This is not a small gap. This is a financial black hole. Let us put some real numbers to this to show you how insane it is. Let us say you have $10,000 saved up. Maybe it is for a down payment, a new car, or it is just your peace of mind emergency fund. You put it in a traditional savings account earning, and we will be generous, 0.40% APY. After one full year, you have earned a whopping $40 in interest. Your new balance is $10,040. You feel like you made progress, right? Wrong. During that same year, inflation, running at 4.2%, was torpedoing the buying power of your money. That original $10,000 now only has the purchasing power of about $9,580. So while your bank statement shows you gained $40, the real value of your money, what it can actually buy, went down by $420. You are $380 poorer in the real world, all while thinking you were being responsible. You are running on a treadmill, but the belt is moving backward faster than you can sprint forward. In real terms, you are effectively losing purchasing power just by letting the bank hold your money. It is the biggest, yet most accepted, financial ripoff in the modern world. So, is all your cash trash? Are you supposed to just throw all your money into the crazy stock market and hope for the best? No, that would be terrible advice. There is a safe place for your cash. You are just using the wrong tool for the job. It is time to introduce the hero of this story, the high-yield savings account, or HYSA. What is it? It is a savings account, plain and simple, but it has one gigantic difference. It pays you a competitive interest rate that is often 10, 20, or even 100 times higher than your normal savings account. How is that even possible? It is not a scam. It is a different business model. Most HYSAs are from online-only banks. They do not have to pay for thousands of expensive physical branches, fancy lobbies, or armies of tellers. They take all those savings and pass them on to you in the form of way higher interest rates. Let us look at the numbers right now, in June 2026. While your big bank is giving you that pathetic 0.4%, HYSAs from reputable online banks are offering rates around 4.15%, with some accounts going as high as 5.0% APY. Suddenly, the math looks completely different. Let us go back to our $10,000 emergency fund. We saw what happened at the big bank. It was a total disaster. Now, let us move that same $10,000 into a HYSA that is offering a 4.15% rate, a real rate you can get right now. After 1 year, you will earn $415 in interest. Your new balance is $10,415. Now, let us pit that against the beast of inflation, which we know was recently 4.2%. Your account earned 4.15%. Inflation took 4.2%. In this exact snapshot, you came up just short by a tiny 0.05%. But wait, did you lose? No, you won. You basically neutralized inflation. You took what would have been a devastating 3.8% real loss and turned it into a near-zero stalemate. You have protected the value of your hard-earned money, and you did it with practically zero risk. And here is the key. This is always changing. Just a few months ago, inflation was lower, and these exact same accounts were absolutely crushing the inflation rate. So the answer to the question, can you beat inflation with a savings account, is yes. Sometimes you will beat it by a lot, and sometimes you will just keep pace. But with a HYSA, you are always in the fight. With a traditional account, you are pretty much guaranteed to lose every single time. This is where you should be asking, okay, this sounds way too good to be true. What is the catch? It is a smart question. The first catch is that these are almost always online-only banks. There is no branch to walk into. For some, that is a deal breaker. But for most of us who already manage our money online, it is not an issue at all. The second concern is safety. Is my money really as safe as it is in that giant old bank downtown? The answer is a loud yes. As long as the online bank is FDIC insured, your money is protected by the full faith and credit of the US government. The standard insurance is $250,000 per depositor per insured bank for each account ownership category. This means having different account types, like a single and a joint account, can increase your coverage at the same bank. The safety is identical. The third catch might be getting your money. You cannot just go to a teller. You will have to do an electronic transfer to your checking account, which usually takes 24 to 48 hours. Honestly, this is a feature, not a bug. It puts a small but important barrier between you and your emergency fund, stopping you from dipping into it for a random impulse buy. So, are there catches? No. There are differences. And for a return that is exponentially higher, those differences are an incredible trade-off for most people. So let us answer the big question. Can you really beat inflation with a savings account? The honest, no-fluff answer is this. A high-yield savings account gives you the power to fight inflation, and very often, to win. It is the single best place on the planet to keep your short-term cash, money you cannot afford to lose and might need in the next 0 to 3 years. This is your emergency fund. This is your down payment for a house you want to buy next year. This is for the new car you are saving for. For that job, a HYSA is the undefeated champion. It protects your cash from being destroyed by inflation while keeping it safe and pretty easy to get to. But, and this is the part a lot of people get wrong, it is not a get-rich-quick scheme. It is not a long-term wealth-building strategy. For most people, it is nearly impossible to save your way to financial freedom in a 4 or 5% account. That is what investing is for. For goals that are 5 or more years away, like retirement, you have to let your money work harder for you. Historically, the US stock market, like the S&P 500, has delivered average returns around 9 to 10% per year before inflation. Of course, that comes with way more risk and volatility, and past performance never guarantees future returns. Think of it like this. A HYSA is the super strong, safe foundation of your financial house. Investing is the engine you build on top of that foundation to actually drive you toward financial freedom. You need both. So what do you do right now? First, the audit. Log in to your bank account. If your savings interest rate starts with 0.0, you are losing. It is time to break up with your bank. Second, the move. Open a high-yield savings account. I will not recommend one specific bank because the top rates are always changing, but you can go to any major financial review site and see a list of the best FDIC-insured HYSAs currently offering killer rates. Third, the strategy. Your first mission is to build an emergency fund of 3 to 6 months of your essential living expenses inside this new HYSA. This is your financial shield. Once that shield is built, you can start using a sword. Any extra long-term savings should go into a diversified, low-cost investment portfolio. Stop letting your hard-earned money rot in an account that guarantees you will lose buying power year after year. The tools available to you are more powerful than ever. Making this one simple change, moving your savings from a traditional account to a high-yield account, is the biggest and easiest financial upgrade you can make this year. It is the difference between sinking and swimming. Now, I want to hear from you. Find your current savings account, APY, and drop it in the comments below. No judgment, let us see what we are all working with. And if this video helped you, smash that like button and subscribe. It helps the channel fight back against bad financial advice. Now go check that rate.